All right. Welcome, everybody. Let's wait a few seconds to have some people join in if they're thinking about joining in. And I hope you watching and you joining in. And also, this will be recorded. So if you are not watching it live, we'll have a recording on this. It'll be on my YouTube channel. And I want to get started. Welcome. This is Mike Patel. I'm in Anaheim Hills, California. And we have the weather like some other states. It's been drizzling for the last 3-4 days, which is very unlike Orange County, but we're coping with it and we need the water. So welcome to Home Savvy Central channel. I have a guest today and I have a very interesting topic. We're going to look ahead and see what's going to happen in summer, let alone what's happening right now. I myself, I'm kind of baffled at what's happening, like I'm sure all the other realtors are and all the other buyers and sellers are. But we want to talk about what's going to happen this summer. And the prediction is talking to a lot of reading blogs, looking at YouTube channels, talking to some experts and other brokers. Are we going to have a dead summer? As the topic says, the housing market may be dead this summer. But before we get into that, I wanted to introduce my guest today, Jackie May. She's in Anaheim Hills in my same office, First Team Real Estate. So Jackie, take a few seconds and introduce yourself.
Hi, I'm Jackie May, and I have been a real estate agent for 30 years and enjoyed so much of it. I have been through pretty much every kind of cycle you can imagine, including the big, huge one, financial meltdown in '08. In fact, a job that I had at that point allowed me to be a short sale specialist for a lot of people who had to go through that. And like Mike said, we work in Anaheim Hills, California, and we usually have beautiful sunny days and we get to sell some really beautiful properties. And so it's just a pleasure to be able to be on here with you, Mike. Thank you.
Good. And we're going to share some great info. So hang around. This show is about 45 minutes to an hour. And we have some really interesting pointers and facts we want to talk about. So let me just show you what I'm going to get started with. I did some report and I wrote this out so I'm accurate about it. If you think the housing market, excuse me, if you think the housing market is about to heat up this summer, think again. Mortgage rates are rising, buyers are stalling, and sellers could be in for a rude awakening. Today, with Jackie, I'm going to break down why this market could be dead by summer based on the reports and based on other things, not my opinion or not Jackie's opinion, and what you need to do if you're a homeowner thinking about selling, whether it's next month or in 2 years. So here's three takeaways we would like to discuss. And by the way, if you have any questions or comments, whether you live, make those and we'll try to address those. And if you're watching this as a recording, feel free to address these three key points or any points, and we will answer those. And the three takeaways are how rising rates are freezing demand, has to do with affordability, why home prices may look stable, but they aren't safe. That has to do with inventory. Housing inventory, as you know or may not know, has gone up or actually, quote, skyrocketed almost 20% nationwide. And the third thing is, what can you do right now to stay ahead? Whether you're a homeowner who's thinking about selling, or if you're a buyer. And most homeowners that sell may be buyers. So let's talk about briefly, Jackie, let's talk about inventory. What's the inventory that you think? Let's talk about Orange County because we're in Orange County or Southern California. In general, what do you think inventory is right now? Is it gone up, gone down, pretty stable?
It's definitely gone up. Statistics that I heard today is that we are actually still a little under what normal inventory was pre-pandemic, but that we have been increasing in inventory since the pandemic. And
Right.
they do call pre-pandemic normal. I don't really know if that's still to consider normal, but yes, inventory levels are climbing at a pretty quick rate right now.
Right. Okay. Well, you know what we can do is let me share a screen and maybe we can see what's happening there. Let's see. Housing market shift. Let's see. All right. Can you see the screen here? All right. Let's talk about that. So this is from Fast Company, and the article says housing market shift, 9 states where buyers are quickly gaining power. And it says the Resi Club analyzed end of April 2025 housing inventory data just released. Here's what it shows. Basically, what they're saying is that in those 9 states, why are buyers gaining power? In other words, gaining control. It's because inventory is higher. I wanted to read an article here. Let me see here. Where was this? Right here. Let's read this. And Jackie, you can see this on the screen, right?
Yes.
National active listings are on the rise, plus 30% between April 2024 and April 2025. This indicates that home buyers have gained some leverage in many parts of the country over the past year. Some sellers markets have turned into balanced markets, and more balanced markets have turned into buyers market. So basically, when you talk about a market, there's a seller's market where sellers are in control. That's when there's very, very low inventory, like we had in 2021, 2022. And buyers are in control when we had a lot of inventory. Jackie mentioned that, we've been in business for a long time. In 2008, there was 12 months of supply, anywhere from 9 to 12 months of supply. That means the buyers were in control. Lately, sellers have been in control for the last 5, 6, 7 years. But in some states, like Florida, like Texas, some other states, buyers are gaining momentum and control, which means inventory is increasing over there. What's your take on that, Jackie? When we say sellers control and buyers control, am I making sense?
You're making a lot of sense. It's also not only are the inventory increasing, it's the buyer demand is decreasing. So there's even a bigger gap that I think is gaining in some areas for sure.
Mm-hmm. Okay. So when you said buyer's demand is decreasing, that's totally understandable. One is because not only are the prices too high and the interest rate is too high, everything else is too high. And we'll talk about that. We talk about PITI, which is the principal, interest, tax, and insurance. So your principal and interest is fixed if you get a 30-year loan. So if you have a $4,000 a month mortgage payment, which is pretty normal for a condo in Orange County, right? $4,000 a month, you get a condo.
For the PITI, yes.
PITI, and the TI is tax and insurance. And what's been happening, and one of the reasons we say summer may be slowing down, is because not only the rates are going to stay high or may even go up, depending on what the bonds do and what the inflation does. I just came from a meeting today with the top 40 agents from First Team, and they're saying that the inflation goes up, if the bond market goes up, rates will even go higher. And I know the Trump administration is pushing the Feds to bring it down, but you can't do that. So if the prices go up, if the rates go up, taxes always go up, property taxes, which is the principal interest taxes, which is property taxes. But the key factor is insurance. Insurance is skyrocketing everywhere. So what's been happening in Orange County regarding insurance? And let's compare that to Florida or other states and kind of explain our audience that the variable is the big insurance, amongst other things, your repairs and updates and all that.
So my understanding, and we have dove deep into this with insurance professionals coming and talking to us, not just experiencing it through the real life of our clients on transactions, but that it's not only the fire-prone California or the flood-prone states back in Louisiana and stuff like that. It has a lot to do. Insurance rates are going up so high because the cost of replacement has increased so much because of inflation. And now, to top that, because of these tariffs, it's expected that they're going to increase even more because much of the merchandise that is, used for construction to rebuild or to repair, damage done that you need done through insurance is going to go even higher and higher. So we don't see insurance adjusting itself downward at all anymore. In fact, the projection is it's going to get higher and higher. And so when you
Right.
couple that with everything else, it just makes it so difficult for a buyer to have affordability.
Right, right. And with everything going up, if we have a fire, or if you have a flood damage like in California and like in Florida, or if you have some kind of damage, it's going to cost the insurance company more to replace because everything costs more. And guess what insurance people do when, like when I get a ticket, right? And I just got one 2 months ago and I paid the fine for it. But if I get one or two tickets, my insurance goes up because their cost is going up, right? The labor cost is going up, the cost of repair or cost of replacement, everything is going up. If I have a fire in the house, which I did 10 years ago, 15 years ago, I had to move out. I was out of the house for almost 9 months. They had to pay for my rents,
Rents have gone.
food, and everything. At least
Yes.
we had to fight it to get it, but that's another story. So the bottom line is the reason we say, and we're not, me and Jackie, we're not saying that the summer is going to be slow or summer's going to be doomed. But I think all the indications are that home prices are remaining high. And of course, please keep in mind that we're talking in general in USA. In Southern California, I have not seen a price drop yet. I expect it to go up anywhere from 3 to 5%, at least in Orange County areas. And in states like Florida, in cities like Austin, prices and number of sales have drastically dropped. So our market is hyper local. So we're talking in general, right? So just keep that in mind. I mean, in your area, it might be up or down, but we're talking in general. So let's look at one of the biggest factors. And Jackie mentioned that people cannot afford homes, or it's getting difficult for buyers to buy. One is that a home that sold for, let's say, $300,000 in 2022 is probably worth 350, 360 to 370 right now. So if I want to buy the same house that my friend bought for $300,000, one, I have to pay $350,000. So that increases my payment. At that time, the rates were 3 or 4%, let's say 5%. Now they're close to 7%. So that puts another wrench where I cannot afford it, or I'm squeezing every dollar to buy the house. But now the rates may even go up. Let's look at this report here from Forbes. Let me see here. Let me go here. Mortgage rates forecast for 2025. Experts predict how much rates will drop. Well, they may not even drop, but let's see. After hitting, by the way, let me see. This report is dated. What's the date on this? I'm trying to find the date. It's a couple of days old. Anyway, after hitting a peak of 7.04% in January 2025, mortgage rates have retreated, but the decline has been sluggish as rates remain trapped in a narrow mid 6% band. Then I read this earlier where it says that this report here, as the Fed began raising rates in March 2022 to wrestle runaway inflation down to its 2% target, the housing market felt the squeeze. Mortgage rates surged to decades-high levels as home prices hit historic peaks amid fierce demand and scant inventory, shutting the door on many would-be buyers. So basically, what we're trying to get at is one of the biggest factors on affordability, especially when the rates are high and home prices are high, is mortgage interest rates. It makes the difference whether you can buy a house or not. And
Right.
again, there's a struggle, as you know, Jack, there's a struggle going on between our administration wanting to get the rates down, which is great for buyers. Hey, I'm for it. On the other hand, the feds are trying to control the inflation, control the bond market. They don't want it to rise too much because then we have inflation and everything's expensive, which it is expensive right now. So, some experts are saying that rates may even go up or they may not even drop that much. Everybody's waiting for the 6.5%, 6.25%, 6%. I personally, and this is my personal opinion as Mike Patel, not a realtor, I don't see rates dropping under 6.5 this year, but I could be wrong. But for the buyer's sake, heck, I hope they drop to 5%. And all my buyers that I have, and Jackie, you have a lot of buyers, they can buy at 5%. But we have nothing to do with it. We have no control over it.
I think if they dropped to 5%, we'd see a whole slew of people come out into the market. And, it would reverse what I think, we see happening right now. But like you're saying, even if we do get into the fives, that, in my opinion, is quite a distance away.
Right. But, I read a report. I actually saw a TikTok video from Barbara Corcoran. Everybody knows Barbara
Mhm.
Corcoran.
Yes.
She said that, and this was 6 months old, by the way, but the data is still valid. She said that if the rates drop to 5.5%, even 6%, all the buyers are going to flood in, right? And guess
Yes.
what's going to do to home prices?
It's going to take away a lot of what the rates being lower accomplished.
Yeah, because everybody's coming in. So a lot of the buyers, and you have 2 or 3 buyers sitting on the fence. I have buyers sitting on the fence. All the realtors have buyers sitting on the fence, waiting for the prices to drop, waiting for the rates to drop. Once they jump in the market, we have multiple offers. And what happens when there's multiple offers? If I have my
Property.
house for sale and I got multiple offers, guess what my neighbor's going to do? Hey, Mike, you were asking for $1 million. You sold for 1.1. Heck, I'm going to ask for 1.2, and he's probably going to get it because now everybody's rushing in.
Right.
So I don't see personally, I don't see a price drop. I don't see a interest rate drop significantly. I don't see property taxes going down, which they never go down. They always go up. Definitely don't see the insurance, which is part of the PITI. And that's why the topic that I chose today is the housing market may be dead this summer. Because I was talking to, like I said, I was in a meeting today with 40 of the top agents in our area with First Team. And a lot of the agents said that not only the buyers are on the fence, they're waiting and waiting, but the sellers are not selling because they said, hey, I'm not going to sell my house because I'm not going to be able to find another house.
That's been a huge problem for quite a few years. And I think we were all optimistically thinking that this year was going to be magic, and because we were expecting rates to change. And I think we thought people are realizing we're not going back to 3% interest rates. And so once they started to get lower in the low sixes and stuff, we'd see a lot of movement.
Right.
Well, here we are almost halfway through the year, and it hasn't happened. It's gone the other direction.
Right. So let's talk about, we talked about PITI. But when you buy a house, there's other factors to consider, right? Number one, and nobody talks about it, your lender doesn't tell you, your realtor doesn't tell you, but 2 or 3 things you have to factor in. At least I talk to my sellers or buyers about it. Number one is that when you buy a house, first of all, I joke and say your Home Depot is gonna become your best friend, because you're gonna go buy that washer, your dryer is gonna break, your dishwasher is gonna break. You're gonna have to go buy something. So you need to have money, which is about, they expect average 1 to 2% of your home value will cost you in repairs. In other words, if you buy a house for $300,000, expect about $3,000 on average over the 4 to 5, 10 years that you keep the house of cost that you need to update your roof, or your refrigerator breaks, or your AC breaks, something. Then you have your emergency funds. Financial planners, financial gurus, they all recommend that you have 3 to 6 months of emergency funds, right? What if you lose a job? What if you have a medical emergency and things like that? So that's not even coming into the factor. So that's why we're saying we have so much, people are choked right now with all these factors coming in, and we're at a standstill.
Right. And there's also the costs even that we don't talk about much, but to get into the home with their inspections and all of that, those have gone up quite a bit. A buyer used to be able to get a home inspection for $350 to $450. And now it's costing here in our region in California close to $1,000. It can top out at $1,000 if they decide to get the roof inspected and a sewer inspected. And I mean that, and appraisals have gone up to about $700. So a lot of the other costs just to get into the home have also increased.
Yeah, notary is what, $200 now, $250
Right.
average notary who comes to your house. Obviously, you can go to the office, but if they come to the house, and most of my buyer sellers want them to come to the house so that it's convenient. It's $200. You have underwriting fee, you have document preparation fee, you have miscellaneous fees. I mean, they charge FedEx and courier fees. Every statement I see is $50.
Yes, nobody does anything for free anymore. I mean, not that they were doing, but like escrows used to pay for a lot of those fees. It's just incorporated in their escrow fee, and they don't really so much. And everything is based on a sales price, usually most of the costs with that. So because the sales prices have gone up so much, whether you're a buyer or a seller, your escrow fees have increased quite a bit too in the last 5 years.
Right. And same thing with the title insurance, right? I mean,
Yes.
right.
Title insurance, escrow fee, tax stamps, all of that stuff that is based, which is about 75% of the items on a closing. So
Right. So when you buy a house, you have your PITI, you have your down payment, you have to pay your, at least in California, 6 months property tax you have to pay ahead. Fire insurance, what you have to pay 12 months ahead, Jackie? Was it 12 months,
yes,
14
it's a
months?
year.
Right. Then you have your moving costs, you have your packing costs, unpacking cost. When you
Right.
buy a house, you're going to buy something new, pride and, dignity. You're going to buy a new dishwasher.
Something else too that a lot of people don't take into consideration is supplemental property taxes. And yes, those are something that are calculated. Now, I'm presuming other states have it. I don't know. I know in California, it's a big one because many turnovers in properties, not all, but many of them, people have lived in their home 20 years or more, and their taxes have been based at a low property, at a low, much lower value. And that's what their property taxes are based on, because California caps were one of the states that at least caps their property taxes to 2% a year. So it doesn't go up on a seller, on a homeowner, with the rate that our prices are increasing. But when you come in as a buyer and you're purchasing a home that was, purchased last 20 some odd years ago, there's a gap of property taxes called a supplemental property tax that buyer has to make up. They get a bill within 6 months to 9 months from from your county. And it's typically thousands of dollars. Even on the low end, there's one that I'm in escrow with right now, and they buying it from somebody who bought 4 years ago. So that's not a long time ago, but their supplemental is already going to be $2,200, and like I said, that's a very low end.
Right. Usually when does that come in after close of escrow? I mean, is there a time period or like
6 months to 9 months, typically. I'm going to base that on Orange County because that's what I'm most familiar with. Different counties might have a different timeline.
So when we close an escrow, they're going to charge you, at least in California, Orange County, they charge you 6 months of pre-tax, depending on what month you close, based on the seller's value that a property tax are paying. And then when I buy or the buyer buys it, there's an adjustment that comes after 6 months. So after you pay all those junk fees, your down payment and points, you better have an extra $2,200 or whatever.
Or more. You should know up front before you close escrow what that is, just so you're prepared for it.
Right. So be prepared for it, right? And then I'm sure that if you move to a house, if you're married or if you have kids, they want a new drawer or a new bed or new appliances. So all those expenses come in. And then what happened to me when I moved in my house, I moved in August, end of August, way back in 96. And it was one of the highest rainfalls in the next 2-3 years.
Gosh, yeah.
And every year I had rain. So in the next 2-3 years, I spent over $20,000 back then. And I didn't have the money. I had to borrow money.
Right.
Because my credit cards were full. Right. So things happen. So
we're making it sound really appealing to own real estate, aren't we?
Well, nothing's for free.
Reality. It's reality.
But that's reality, So the point is, if you can't afford a $400,000 house, get a $350 house.
Right.
Right. Let me show you something else. Talking about values, I came across this very interesting article that I need to share. And let me see. Can you see it? Let's see.
Not yet.
Yeah. How about that?
No.
Oh, okay. There you go. Share.
There you go.
Okay, so I'm going to go back to the original screen. So this one came out, this report is March 21st, 2025, from the National Association of Home Builders, because they were concerned about the tariffs and everything that's going to happen, and they're looking things ahead. And they predicted, or they did a survey, and look at the survey. It says nearly 60% of U.S. households are unable to afford a $300,000 house. I mean, Jackie, when we read this, to us, it's different, right? Because our medium home price in Orange County is 1.1, 1.2.
Right.
But when you
Right.
read this, what does it tell you? What shocks you about it?
Well, that the majority of people, the
Majority,
majority,
60%.
yes, cannot afford to buy a home. That's what shocks me about it. That, and a $300,000 home, I don't know, it would, how many states that is like a median home in, but I have to presume, a good percent, but that's still 60% of the people cannot afford. And knowing that there are many states like California that the entry level is more than double that, or at least double that, that lets me know that that number is much larger as well.
Right. But here's the thing. And of course, these are data I read about 3-4 months ago, two data that we need to find out. And that relates to this article. Number one, I think the medium household income in USA is about $80,000.
Mm-hmm.
The medium home price, this was 2024, was about $420,000. Now
Okay.
we know that at $80,000, you cannot afford to buy a 420 house at 7%, maybe at
Right.
2%,
Not at
3%.
7%. Yeah.
So at 7%, that's why this kicker is there, which
Mm-hmm.
tells us that the average American home buyer cannot buy a medium home price. That's a sad story today.
And Mike, did you say this article is a little couple months
No,
or
this
no?
article is March 21st.
Oh, March 21st.
Yeah,
Okay.
it's not
So
old at
I
all.
mean, and on top of that, as we're discussing it, that we do see that there's going to be increases still in insurance and such. That number, unfortunately, is going to get higher.
Exactly. Exactly. Yeah, let's look at this. NAHB has updated its housing affordability graph of 2025, and the
Okay.
latest data show that 76.4 million households, which is 57% out of a total of 134.3 million, are unable to afford a $300,000 house. I mean, in Orange County, we can't even get a mobile home for that.
No.
The
Yeah.
graph is based on conventional underwriting standards that assume that the cost of a mortgage, property tax, and property insurance should not exceed 28% of household income. Based on this methodology, NAHB economists have calculated how many households have enough income to afford a home at price thresholds. The good news is this is a very strict DTI or debt to income ratio that they figure out, right? The good thing is there are VA loans and FHA loans where
Like
you can have household income should not exceed 28% of household income. But I think now they're giving 30, 35 up to 40%. So that should
FHA is up to
increase.
40. Yeah, you're right.
So that should give us a breather that, hey, this is a report, but it's kind of tight. But the
Right.
way around is like, for example, if you get an FHA loan, which is the Federal Housing Authority loan, right? The government loan,
Right.
they don't look at 28%. I mean, you can find anywhere 20, they can go up to 40%, I believe, up to 45% of your income. And I'm not talking about DTI, which is a little bit stronger, and they can go up to 50%, I think. So this is not bad when they can go 40%. I think that's going to increase, or that's going to decrease from 60% to hopefully 40% or more. So more people can afford it.
Yes, hopefully so. And like the FHA does do a pretty good job these days of increasing their loan value for whatever region you're in. Like in California, because we used to be where a home was 900,000, let's say, and they only allowed you to get an FHA loan up to 300,000 or 350 or whatever. They've changed that over the last few years and have been very proactive in increasing the loan amount to reach more the median house prices, so more people can use those loans to get into it.
Right. Okay. I was just curious, for those of that are watching, have you noticed homes sitting longer in your neighborhood, or are they selling fast? Drop a comment or make a comment what's happening in your neighborhood, so we get to know, hey, what's happening in Idaho or Montana, because we kind of read things and we read the headlines, but we don't know what's happening in specific areas. So if you are live or if you're watching this recording, please make a comment. At least we know. So next time we have a live, we can use some of that data on our live show here. So let me go further. So what's your, based on you talking to, I know you are out showing today, but that's just
Mhm.
one buyer, but talking to other agents and brokers, not only here, I know you also belong to a national network of a lot of agents nationwide and you're on the Facebook
Mhm.
groups and all that. What's the sentiment of the buyers right now out there?
For the actual buyers,
Yeah, in
they're
general, what are the
they're
buyers thinking?
hesitating. They're hesitating. They're looking, but they're hesitating. I've shown all cash buyer that's up to 2 point. We started at 2.5 about a year and a half ago. They
Hmm.
they are a little picky on what they're looking for, but we're now up to 2.7. They had to increase because they weren't finding what they wanted and prices went up.
Right,
They have recently found something that they like, but they are hesitating because they have a very strong belief that at that price point, the market is going to start seeing price reductions, which
mhm,
they're not wrong here.
right,
They're not really wrong.
right,
Buyers with loans, honestly, everybody that I have in my pipeline, people that have been looking to buy, except for one that I did just get into escrow, where they are looking for a specific area, and one came up and they loved it. Now they're in escrow on it. But other people that have been out looking have decided to wait. It's not like they're pulling themselves out of the market, but
right,
there's just a lot of turmoil in their minds, and so they're waiting to see
right,
what happens in the next couple of months.
right. Yeah. Yeah, it's tough for the buyer. It's tough for agents, right? Because we have to guide them. We have to let them do what they want to do. If they want to wait, they're gonna wait. It's
Right.
an emotional. It's a business purchase. You have to buy a house based on your income, based on your qualification, based on the interest rate. At the same time, it's an emotional decision. I want to move near my mom. I want to move away from my parents. I want to move near
Right.
my son who started college. I want to move near the hospital, or I want to move, with my friends or buddies, golf buddies or whatever. So it's an emotional decision. And we have to watch, as agents, we have to watch both of what's happening. One is financially what's happening. And a lot of the buyers cannot pull the trigger because they're concerned or not sure where it's headed. And I think the toxic political conversations in the media, and the toxic tariff situation has dropped the confidence. The consumer
100.
confidence has dropped significantly. I was talking to somebody, and she argued with me. No, no, no. I don't think the consumer confidence has anything to do with it. And so, the tariffs is, in fact, one guy mentioned that the tariff has nothing to do with it. And I said, yet it has everything to do with it because it does a scare. So I gave him an example. If you're sitting in the room and I'm sitting in the room and there's other people, and I say, you know what? There's a large snake under the bed. Whether there's a snake or not, if I mention that, how many people will be scared and get the heck out of that room?
Right. Exactly.
Even the
100.
snake's not there. I created
A
a
fear
danger.
factor.
So
Hmm.
what tariffs has done is created a doubt in, I mean, this is my personal opinion, nothing political here, whether you're red or blue or purple, liberal, independent, whatever. You know, the tariffs has stopped a lot of sellers from selling and moving, has stopped from a lot of buyers from holding on. And that's why I called it earlier is a frozen market. And it's
Hmm.
getting worse because I don't think the tariff situation has been corrected. There's still a war going on between China and Canada and Mexico. And, the water has been rattled with poison. And it's going to take a while for that water to calm down.
Right. And once the negotiations are had, unless the interest rates react immediately, I think people are still going to stand back and watch what happens with that.
Right,
Things don't necessarily react quickly.
right,
And confidence takes a while to get back.
right. And I don't blame them. If I'm thinking about buying a house, and what's one of the biggest purchases of a typical American family?
The
It's a house,
house.
right? I'm not going to jump into that. I want to make sure that I feel confident. I feel 100% sure that that's the house I want. That's the price I want to pay. And that's the interest rate I can afford.
Right.
Right. So unless that's going to happen, we as realtors cannot push them. We can guide them, give them resources, and tell them whether they should buy or not, but we cannot push them. We cannot, we can guide them. That's all we can do. And
Right.
right now, a lot of the sellers who are buyers are holding off, and a lot of the buyers are holding off. So, on that note, let's talk about the sellers. First of all, we talked about the shortage of inventory. Even though the inventory is rising right now in certain states, like for example, Florida inventory has skyrocketed, I think 30-40%. A lot
Wow.
of vacant
Mhm.
homes. Naples is actually seeing a decline in home prices. Austin, from I read a report, the number one city where there has been a decline in home sales and home prices, I believe, is Austin. So, things are happening. But on the other hand, Southern California, I think we're cranking, right? I mean, I don't see a price drop. I don't see an increase in inventory.
I think that if a seller prices their home right where we are, in other words, market value, then no, we actually are still seeing multiple buyers come in with multiple offers if it's priced right or slightly under.
Hmm.
What we are for sure seeing is if sellers are stretching at all on their price, it's either sitting there or lower offers, or buyers are speaking to the seller by giving them lower offers.
Right, right. Yeah,
I think that that's a slowdown.
right,
I definitely don't think we're circling a drain or anything at this point, but there's definitely been a change, a pivot in the market.
right. So here's what I'm observing. One is that the buyers are waiting for the rates to drop, not necessarily the price, but at least the rates to drop. But on the other hand, if we talk about sellers, let's talk about the sellers, why sellers are stuck, in the sense that a lot of the sellers in 2021, 2022, when they had 2%, 3%, 3.5%, 4%, what is it? Almost 80% of all the people who had mortgages refinanced.
Hmm.
And I think 50 to 60% of all the loans out there, at least 2-3 years ago, was under 5%.
Yes.
Right? So what's happening is with the low mortgage rate, sellers don't want to move. So which is creating the number one reason there's a shortage of inventory is because of that. Of course, also new home construction cannot keep up with it. Right? But at the same time, like I mentioned earlier, the other reason there's a shortage of is the new construction. A lot of the builders, and I read this report, are not building homes anymore. They've switched that building. And I don't know if you saw this report, but I saw a report that a lot of the builders, and I'm talking about large builders, instead of building homes and building single family homes and taking so long with the red tape, with the permits and the city regulations, they're building what you call, I don't know if you heard about it, called the build to rent homes, where they
Hmm.
build homes, apartment units, their
Even
homes
even
bought by.
home, single family.
Yeah.
Yes.
So talk about that. So let them know what you think about those, whatever, build to homes, build to rent homes.
Well, I think that first off, I've always said and thought that that does prove that the people who spend all the money researching on how they want to invest money, there has been a determination again and again and again that real estate is a very good place to park money, and that these builders are seeing that. I think ultimately, in the whole picture, home prices are going to continue to increase, um, unless, of course, population decreases. But right now, there's not enough homes to house everybody, and so I think that they have realized that they can capture huge rents because people have to live somewhere. So the rental market has been climbing pretty much everywhere. I think even in the states that are experiencing the decreasing in the prices, their rents are probably holding out a little bit, stronger
Hmm.
than the pricing, because what we talked about to begin with, what it takes to actually purchase the home versus what it takes to get into a rental, you know.
Right.
So I think that that's just going to be a wave of the future. I've
Yeah.
seen it locally. where there's a whole little communities where there's single family homes, and there's a property management company and they rent them out and they keep turning them over that way.
Right. Yeah, and corporations are buying. They're building these huge buildings like condos or townhomes. The corporations buy them. 500 million, 200 million. There's nothing for them. Blackstone, Wall Street. They're buying those and renting them out and making good money. And one of the reasons there's a demand for rentals is because these buy to rent homes or build to rent are in good areas. They're in suburban areas. They're in metro areas. So people, let's say Riverside, people who work in LA, Los Angeles, they drive from Corona to Los Angeles, what, 2 hours drive in the morning?
Mm-hmm.
So if I build a build to rent, these guys are going to buy their rent there. So there's a demand for rentals in the metro areas, and that's where these are going up.
Right, right.
So there's a big demand for that. Wall Street has been buying a lot of rental properties. They have controlled a lot of homes they buy from the banks. In 2008, they used to buy them by the thousands, right? Banks want to get rid of them. So instead of selling one at a time, Wall Street bought them thousands at a time. They refurbish, rent it out, and now they're flying high, and they've still been doing it the last couple of years. That's another reason there's a shortage, right?
Yes. Well, and I think there's going to continue to be a strong rental market because unfortunately I think we've all heard is credit card usage has been on the rise. And I think that prohibits a lot of people for being able to qualify for a mortgage quicker than it prohibits them to be able
Right.
to rent,
Yeah.
because of that debt to income ratio that you spoke about and
Right.
stuff like that. So
Yeah. Yeah. Let me see here. I'm going to share one more screen here. Housing. Okay. Let me see here. Give me 1 minute. I'm going to share another screen. Share
sure.
screen. Housing market summer prediction. Summer. Whoops. Okay. There you go. I don't know if you can see it or not.
Can see
Okay.
it.
No, that's not the one. Hold on. Sorry about that. I
That's
always do this. Every time I do this. Hold on. Let me stop screen, and I'm going to share it again. Share screen. Now let me get the right one. I think it's which one is it? Housing market. Housing starts. Where is that? Housing market. Oh, there it is. Okay. Sorry about that. Took me a
That's
while. I've got
okay.
a couple of screens open here. So let me read this report. What it shows, we were talking about the shortage of housing. This report is also from National Association of Home Builders. It came out on April 17th, 2025. So it's 2 weeks old. It shows here when we were talking about inventory is that the housing starts decline amid economic uncertainty. Constrained housing affordability conditions due to elevated interest rates, rising construction costs, and labor shortages led to a reduction in housing production in March. Overall, housing starts decreased 11.4% in March, this is 2025,
It's a
to a
lot.
seasonally adjusted annual rate of 1.32 million units, according to a report from the US Department of Housing and Urban Development. Further, I'm going to read here. It says here that the March reading of 1.32 million starts is the number of housing units builders would begin if development kept this pace for the next 12 months. Within this overall number, single family starts decreased 14.2%. So basically, what we're seeing here is instead of home construction going up, it has actually decreased, right?
So that's interesting. I remember they used to say that was an indicator on pricing, but it sounds like it's not necessarily. Somewhat affordability, but there's other factors in there that usually don't exist when they look at the new build starts, like the construction costs and the labor. I guess it's just the affordability of the builders that has to be passed on to the customer, and the buyers are not, it's everything combined.
Right. It also talked about labor shortage.
Mm-hmm. Which
Go
I
ahead.
guess, I think we just heard of the labor reports and everything again, and I personally was a little bit surprised. I expected them to be worse than what they were, and I think everybody was a little surprised. They came in, unemployment came in actually pretty strong. I guess what we hear on the media about uh, effects tariffs are having on layoffs and governmental layoffs and stuff like that, you know, maybe are blended into these numbers. And so they don't sound as strong as what the media makes them out to be, you know, because I mean, if labor is an issue there, people can still get jobs. It's not like that's the problem, that there's no work to be found out there.
Right, right. Well, you know, funny thing is when I was coming back from the meeting, I talked about I went to the meeting with all these agents.
Right.
On the way back, I was listening to a podcast or a report, and they were talking about the Los Angeles fire. Sadly, we had a fire a few months back, and how many homes, I don't even know how many homes got burned. A
Yeah,
lot.
it was actually thousands. Yes.
Yeah, about 10,000, 5,000 big homes. So what they were talking about is, and they were talking about tariffs, by the way, and the impact of tariffs, and they were talking about deportation. Today is Cinco de Mayo, and there's a lot of places in Los Angeles area, they're not celebrating that like they used to because of the scare of mass deportation, right? Whatever happened, ICE may show up or whatever. Besides that, what this gentleman was talking about, he was a contractor, not a big contractor, you know, a regular contractor who builds homes, single, not DR Horton or KB Homes. And they said, we are having a hard time. We signed the contract with the insurance companies or the owners, but now we regret it because everything has gone up because of the tariffs and the mass deportation. So they're having two issues. One is going to take them 6, 7, 8 months longer to build a house. And here's two reasons why. One, all the material they used to buy from the local warehouses, now they go to Bakersfield or Lancaster or even in Arizona to buy the things because it's cheaper there. So it takes longer for them to get the materials because the material in LA is too expensive because everybody was going to buy it. The second thing that's happening is because of the shortage of labor already in Los Angeles area, they're having a hard time finding labor. And the labor that they find, they want to contract, right, with a certain amount of minimum amount of money, which is a lot higher than what it used to be because there's a shortage. So if I was a labor guy, putting nails in there or putting the sheet rock or whatever they call it, if I was getting $20 an hour, I know there's a shortage because all my buddies are moved or got deported or whatever. They're asking for $30 to $35 an hour minimum. So the home builders are scared right now of two things. One is going to cost them a lot more. They may go at a loss building this darn house, and it's going to take them 6 to 7 months to a year longer. So in general,
time is money. Yes.
Time is money. But in general, the LA people, the owners, are going to have to wait a year, 2 years from what they were told.
Right.
So we have a big situation brewing because of all this situation we're not seeing. Interest rate, home prices, tariffs, mass deportations. And that's why summer freeze, the whole idea of talking about this is not to be negative. We're not trying to be negative. We want to put the facts out there. So if you're a seller, if you're a buyer, before you make the move, talk to a professional, talk to your attorney, talk to your accountant, talk to 2 or 3 expert realtors, talk to 2 or 3 expert lenders before you make a decision. Get opinions because a lot of things brewing that you may not know. I mean, what do you say, Jackie?
Oh, absolutely. I think that they should garner at least 2 to 3 opinions from professionals in the field because it's a difficult decision. I mean, home ownership has always been a financial stepping stone for people. That has been, not forget about the pride, forget about all that, you know, the warm fuzzies that it brings you. But if you've owned a home, it's been a way for you to, I mean, for any length of time, your equity grows and your wealth grows. That's the first, one of the main things that has been able to let people grow their wealth over the years. And I think that what's happening now is a little scary. I still think that this is going to be a vehicle. It is a vehicle for people to still continue to grow your wealth, but you just have to make smart decisions. Don't overextend yourself while you're doing it. I still don't think it's bad if you can qualify and afford. I mean, we may make it sound doom and gloomy. We're not trying to do that. We're just bringing reality. Make sure that you think about all these little areas that we talked about that money is going to, you're going to need money for, because it's still, you get your foot in the door on home ownership, and it is still the stepping stone for your financial, freedom and future.
Yep.
That's why our generation is one of the wealthiest, because we have owned homes and our equity has grown. And it doesn't seem like that's going to be possible to have growth like that again.
Right.
But it's happened. And again, unless we have a total population, if the population stops growing, and it's still going to take many years for people to be able to have the housing that is necessary.
Right. Absolutely right. And we talked about property taxes and insurance. So let me show you another report to see how significant this is, because this is very important that they understand. Let me share my screen, and hopefully I have the right one this time.
I do want to point out that I was surprised to find out how different property taxes are across the U.S. Like I guess I always thought that people had the cap like California does on our property taxes, where they can't go up more than 2% a year. And I found out many states, if you get appreciation, your property taxes are going up every year that appreciation is going up. So people who own a home, they could go from, a value, they could have a $50,000, a $60,000 increase in their assessed value on a yearly basis. And that could also be difficult for somebody to afford the home that they're in. So it is important for you to find out how that works in your region as well, wherever you're looking to buy.
Exactly. Each state is different, right? So, yeah, we're lucky in California. We got the Howard Jarvis, right? Prop 13.
Prop 13, yeah.
Came out in 86 or whatever. I mean, that's a lifesaver for all of us. Otherwise, I couldn't afford this house if I had that time.
Right. Yes, exactly.
Yeah. So on that note, we know that we talked about the PITI. I want to go back to it. So in California, we are lucky that our taxes only increase 2% per year, or approximately 2%, depending on each county, right? But, if my taxes were $3,000 last year, I know that it'll increase maybe 2 or 3% at most. So I'm lucky. Texas is not that way. Nebraska is not that way. Florida is not that way. It could double and triple, and some states have happened. So let's go back and talk about this report about insurance, because I can guarantee you right now that of all the people, especially Florida, one of the reasons they're having a big issue of home sitting on the market is because two things. One, of course, we are sorry that there was so much hurricane damage. There was a building collapse. After the building collapse, they have new regulations where any building, condo or townhouse that's over 3 stories has to be reassessed. So a lot of the assessment has come in. So the prices have skyrocketed. Insurance has skyrocketed, right? So if I read this report, home insurance rate to rise 8% in 2025 after a 20% increase in the last 2 years. And of course, this is from Insurify. Insurify projects, the average homeowner will spend an additional $261 on home insurance premiums by the end of the year. California, will see one of the highest rate hike at an estimated 21%. Has your insurance gone up, Jackie, lately, or no?
Oh, Mike, I wanted to cry.
Yeah.
I went from $800 a year to $2,200 a year. And that was from 24. I went from a $600 insurance plan to an $800 from when I moved in here, from 23 to 24. And I thought, wow, okay, it went up. But then from 24 to this year to go up, I'm beside myself with that.
Right. And one of the reasons I brought this up, and of course, we're not trying to be negative, but let's say you're a buyer, right? And you're trying to buy a house. Of course, your lender will estimate the insurance. So if you got qualified last year at 7% on a $400,000 house last year, and you say, oh yeah, Mike, you can buy the house. The same house today, you may not qualify because of why? One thing, your insurance, because when they go get the quote, insurance has gone up. So you'll be qualified for 380 or 375 because the insurance is that much of a difference, especially in states like Texas and Florida, not that much in California. Well, California at the most. But let's look at the average. Home insurance average annual cost in 2025. Let's go back to 2021. The average home insurance was $2,500. And remember, this is an average. That means somebody's paying 5,000 and somebody's paying 500, but the average is 2,500. Let's go up and up and up. Come back to 2025. The average is 3,520. That means there's folks that are paying 10,000. If
Yes.
you're in a fire hazard area, I'm in a fire zone, so my insurance is very high. I'm paying more than 3,500 a year. And there's other people who are probably paying right here.
Right.
When you go buy a house, this insurance affects your buying capability, your buying potential. Because guess what else happens? A lot of the buyers say, oh, I want to buy a brand new home. I want to buy a townhouse. Guess what happens when you buy a brand new home or when you buy a townhouse? You have homeowners association, right? So now what happens is, because you have homeowners association, not only has your insurance gone up, but your HOA has gone up significantly. So if you were qualified for 400, now you're down to 350. And that's where the dilemma is. Everything else is going up except your income in general.
Yes. Yes. And it is it has been a big problem with the qualifying of people. And I'm glad you brought that up, because a lot of the interest rates are pretty much where they've been. Now they're sitting at pretty much where they've been for the last 6 or 9 months. I mean, they've gone up and down, up and down, up and down, but they're pretty much where they have been. And so I do know that a lot of people think that they did get pre-approved and they're good to go. You know, they can do their shopping and stuff again. But that one factor has changed, and that pre-approval could not be validated anymore because of the insurance rate. You might still find out that you can. It's just, you need to know that it's possible that that one cost is going to take you out of the price range you were in last year.
Right. Yeah. And that's happening. But let's talk about the good side. We've been negative. We've been doom
There's a
and
lot
gloom,
of
but
good
hey,
sides.
let me drink some water and talk about some good stuff, right?
Right,
So
exactly.
the question is, who's buying and who's not buying? So what category is buying homes? The good news is a lot of the boomers are buying, because guess what? One, they have a lot of cash, and what else do they have a lot in their homes?
Equity.
Exactly.
Yes.
So let's talk about that. How are boomers buying? How that can help? I don't need, if I'm a boomer, how does that help me buy compared to like a millennial who's struggling and working and trying to buy?
Well, yeah, some of the boomers have the same problem that they do, that the millennial, I mean, they obviously have the ability, the money, whether it's the equity in their home, so they sell their home to get that equity to go buy another property. Some of the boomers, however, do run into a problem depending on what their local market is like, where they can't have that as a contingency. They already have to have that done and the money in the bank, because a seller in Orange County, for instance, isn't so inclined to take the risk of your home not just selling but closing escrow. So you know, that's a fact. The boomers that I've dealt with over in the last year primarily have purchased their replacement property through one way or another first, and then I've sold their home.
Okay.
And there's things like bridge loans that can help them do it. There are a lot of strategic ways that somebody can do that, whether they're a boomer or not. You know, if somebody, moving on to another home. So that's positive. That is a positive thing. And if the values are going to go up and down, unless you're moving across the US and you're going to an area that's not mimicking where you're coming from, prices will go up and down. So whatever you're coming from and going to is going to, follow the same trend.
Right. Yeah, absolutely. So you mentioned earlier the bridge loan. That's different than a HELOC or a home equity line, right? How are they different?
The HELOC and home equity, you still own the house, you take the equity. Let's say your property is worth $2 million and you owe $0 on it, and you're going to go buy a home out of state and you need 800,000. You take 800,000 and you can go buy that house. Now, home equities and lines of credit typically want don't want you to then go move and then sell your house. They expect that you're staying there,
Mhm.
and that's going to be your primary residence still. So some people have done that, gone and bought a home and rented it out or kept it as a second home for a while while they're doing a transition out of state. I've had clients that do that. The
Right.
bridge loan actually allows you, they know you're going to sell your home. They allow you to use that equity, and they put a loan on the property where you virtually don't have to take the equity out, and you can sell your home simultaneously, but you have a full-blown loan approval saying that you are qualified to go purchase this home, and they're basing that on the equity here. So
Mm.
you go buy that, escrow closes, you might be an escrow on this one, it doesn't even matter. The sellers on that end see that you are approved for a
Mhm.
loan, not making this home contingent. So then they can accept your offer based on a non-contingent offer.
Right, right. So two questions come to my mind if I'm a buyer. One, I'm a boomer, as an example. So does that work if my house is paid off? What if I have a loan on it? Can I still do that bridge thing? Because
Yes,
I
you
have a loan
can.
now, I have a loan here and a loan there. So how does that work?
It all depends on your qualifying ratios. If you can qualify, however your income is coming in, if you can qualify, it doesn't matter. It can be. I actually had a Whittier move to Placentia, California, and
Right.
they had a small loan and they did a bridge loan on it, and they were able to buy in Placentia, and yeah, a home that is more than what they were selling for. And then once that they closed escrow on that house, and then we ended up about 3 weeks later closing escrow on this house. They were
Mm.
able to do a principal reduction from that extra equity that they got from that, and they were able to do what it's called a recast on their payment. They were able to take that
Oh,
extra money and put it down on the new bridge loan, and it reduced their payment.
okay. That's the
Yes.
recasting, right? Right.
Yes.
Usually they don't allow it, but on this one they do. So you can,
Yeah. Yeah. It's not cheap. I mean, you got to, there's points involved with a loan like
okay.
that and everything. And that I would highly recommend, if somebody's looking into it, that they shop around with lenders,
Hmm.
because we found a huge difference. It cost
Right.
my clients like $12,000, and they were quoted, one was 20 something thousand, and somebody else was going to charge them $35,000 to do that. So I highly recommend that if that's something you're considering, that you do shop around for a loan like
Right,
that.
right. Yeah, that's good to know because some people may want to buy something first and feel comfortable and then sell or whatever. So that's good to know. You can
And
either
I
do,
think,
yeah.
I'm sorry, I think that that's a huge reason why the inventory was stuck for so long,
Uh-huh.
because everybody would say, I want to sell, but I don't know that I'm going to get what I want. So by this happening, it allows them that,
Right,
that to know, that peace of mind that they got what they wanted, and
right,
then they
right.
sell.
Okay, cool. So we're going to switch some gears. That's great info that, there is a bridge loan out there. You can take a HELOC, and buy something and rent it out, or buy as an income property, or buy it and then move to Texas and then sell this one. So that's good to know. So I want to talk about the last segment, which is strategy for smart sellers. So if I'm a seller, whether I'm going to sell and buy another house, but most people either buy and move up or move down. So I'm going to read out 3 or 4 sentences, and then Jack, you can just give a quick explanation. Basically, it's what are the strategy for smart sellers, and the key moving points are: if you must sell, price it aggressively. What does that mean, or how can you explain that to a seller?
Um, that means that if they've seen a house in there that matches a comparable home that matches, their size, their condition, all of that, and it sold for $1 million 2 months ago, that they should not go on the market at $1.2 million. That
Okay.
they should go on the market, within reason, time wise, the same price, if not a little less than the one that was just on the market. That is really important, that you consult with your local real estate agent, because if you're in an area like we are, that there's still strong buyer activity, then you have the opportunity to get multiple offers to drive it up a little bit. If
Mhm.
you're in an area that is not doing that, then you might only get best what you listed for. So it's just, it's a good practice here, but I would definitely check with your local realtor. That, that's one way. Or offering buyers incentives. I mean, we're talking about interest rates. It doesn't always make sense, but sometimes the seller can also offer to buy down their interest rate. Or, as we've learned, there are some assumable loans, FHA and VA loans out there. It sounds crazy, and it's going to be a few and far between that match will make, but that is an option, that they might get a low interest rate loan if they can come up with the cash gap, and different areas that might not be that big of a cash gap either. So those are a few things but I also think how you show your home, you can't be lax about it. First impressions really matter now. And so it's, because people aren't, they're not flying off the shelves. You can't get away with as much as you could before. So I would show up, as a strong seller, put a great product, your house out there so that it's beautiful.
Right. And couple of things you can do to make it beautiful. What's the basic things you could do? Couple of things. Any suggestions?
Oh, absolutely. Clean. Declutter. First thing is declutter.
Declutter,
You got to pack it up anyways. Pack it up in a box. You can put it in the garage. Garages don't matter. Declutter. Make it clean as possible. Hire a professional cleaner, because they're going to make it cleaner than you probably ever would. Clean your windows. If your walls and everything need painting, that's a really cheap fix. Cleaning your carpets, if you've got carpets, clean is key. And if there's any dripping faucets and stuff like that, just hire a handyman. I mean, the more you can put into it, obviously the more money you're going to make from it. But that's another area that you should consult with a real estate agent or two, because they can give you ideas. What is the best return on your investment? Sometimes you walk up to a door and that is the main thing. People walk up, that's their very first impression. And it could be, the paint's peeling, or there's fingerprints all over it, or whatever. It is so cheap to paint, to sand and paint the front door to make it, glow and look beautiful. That's a really cheap fix that they can do.
Or the lock may be old, right? The lock may be 20 years old. Change to a new lock,
Yeah. I mean, there's really things that you can do to make your house shine. It's just going to, again, use your expert real estate agents to tell you what are the best things that you should do. They're going to know what the buyers in that area are looking for.
Right. And what about the timing? How long is it taking to sell now?
Well, so the most recent listing I have offers coming in today on, it is in a area called Villa Park, and it's 1,950,000 on the market. That price point between 1.9 to 2.5 is taking 41 days to sell. At the beginning of the year, it was about 36 days. So that time frame has expanded. Last year, they were flying off the shelf at that price point. So it really does depend on your price point. And if there's any hurdles, condos with their insurance issues may have hurdles. So those are taking longer. So if you're planning to sell, get your ducks in a row, because if you think that you're going to be out by a certain time in summer and you decide you're going to put your house on the market in June, and you see that and you don't know that it's taking 92 days to sell, you may end up having to cut your price more and more and more just to get a quicker sale than if you plan ahead.
Right. Can you just talk briefly about how the HOAs, what can you do or check with your realtor or your association or your property management company about HOA before you even think about moving or put it up on the market? Couple of things that you gotta know about HOA that you come across.
So insurance is a big one, and lawsuits. Those are the two main things. You're going to see an HOA dues amount written on an MLS sheet. And around here, it's typically 400 is about average. And that 400 has been going up like we probably went like 7 to 10 years without seeing much increase in HOA dues at all. And starting from, I'm going to say 2023 on, they've been creeping up. And in the last, in the last year, they've exponentially gone up because of insurance issues. So I think that they should have their realtor contact the listing agent, and hopefully the listing agent has done some homework and can actually give you some of the documents from the HOA that gives you that information.
Okay, cool. Okay, I think you have an appointment. I have an appointment. We ran over time, so I really appreciate you coming in. We're not cutting short, but we'll have this next week. So for those of you who are watching or have watched, if you have any questions or need a referral to a nice lender, when I say nice, a professional expert lender or a realtor, make a comment. I'll refer you to a top agent who knows your area, local area. And in the context of time, Jackie, I really, really appreciate you coming in.
Sure,
any last
pleasure.
word that you want to say to the audience?
Don't be afraid of homeownership. Just get educated about it and make a good decision, not a quick decision. Don't walk into an open house and go, I want to buy this. Prepare ahead of time. And sellers, the exact same thing. Prepare ahead of time. Prepare.
Okay. Well, thanks a lot. Thanks for watching. We'll see you next Monday at 5:30. Jackie, thanks again. I'll hope you can come back again.
My pleasure. My pleasure.
All right. Thank you.
Bye-bye.
Thanks.
Sure.
Okay.